Good morning. Thank you all very much for joining us today, and welcome to DC Advisory Global Secondary Market Outlook webinar, Beyond the Primary. I'm Sabina Sammartino. I'm a Managing Director in our Secondary Advisory team. I have over 25 years of experience in private markets, of which the last 15 years spent into in the secondary space, and particularly both as an investor initially and as an advisor more recently, and focusing on advising general partners on how best to optimize and use the secondary market to achieve their objectives. My last job before joining DC was Global Head of Secondary Advisory at Mercury Capital Advisors, and before that, I was Managing Director in a global secondary fund. I've got here with me my colleagues, Michael and Ludovic. Michael.
Thank you, Sabina. My name is Michael Wieczorek, and I'm a Managing Director in the Secondary Advisory team based in London. I have over 20 years of capital markets experience, having joined DC Advisory 2 years ago to launch the firm's GP secondary offering. Prior to joining DC, I was a partner at Elm Capital, advising sponsors on secondary solutions and primary fundraisings. Ludovic?
Thank you, Michael. I'm Ludovic Douge, Managing Director as well in the Secondary Advisory team. I'm based in Paris. I joined DC Advisory last year, and I have more than 10 years experience in investment banking, and especially in secondaries. Before joining DC, I was a partner and head of secondaries at Jasmine Capital for 7 years.
Thank you, Ludovic. Thank you, Michael. Now, in today's webinar, we're going to go through the findings, the key findings of our recent survey. We have surveyed over 80 market participants in the secondary, and we'll highlight what are the key trends and the strategies that have been utilized by GPs to optimize their portfolio management and to maximize returns. At the end of our presentation, there will be a Q&A session, and so please do feel free to submit any questions you might have through the Q&A function. Now, we'll go through the content. So what we've got, we'll go through the GP-led secondary market volumes and the growth that we're seeing in the last few years. This will be followed by an overview of the CV solutions and what the GPs have indicated as their key objectives when pursuing a continuation vehicle and in general a GP-led solution. And also what are the most important factors for both investors in the space as well as GPs when assessing a continuation vehicle. This will be followed by an overview of fund financing and what are the key objectives and the drivers of this type of solution. And subsequently, we'll look at the evolution of the competitive landscape in the secondary market, with particular focus on the new entrants that we're seeing. Lastly, we'll look at market outlook and what we should expect for 2025, followed by Q&A. Now, if we look at the GP-led secondary market volumes growth over the last few years, where there's been a significant growth, and in particular, we have seen the growth of in GP-led by 4 times, or even more than 4 times since 2017. The 2024, it's another record year we expect for GP-leds at 67 billion, over 67 billion in volume expected, which surpassed the 2021 number of 66 billion. Well, there are multiple factors that we expect that have driven this growth. And one is the continued global softening of traditional exit routes, such as M&A and even more IPO activities. And this has resulted in limited distribution of proceeds to LPs, to limited partners, which in return has been put pressure on GPs to find alternative ways of providing liquidity to their investors. This is also coupled with the acceptance of secondary solutions among GPs, which are now looking at this as an alternative and an interesting and flexible portfolio management tool. In fact, if we're looking at the distribution and the percentage of distributions from this type of solution that have been generated by continuation vehicle has increased in the last, and it's been increasing over the past few years compared to other exit strategy. Now, we expect the growth to continue in the coming years, but specifically looking at 2025, we would expect this to be another record year and to surpass the 2024. Interestingly, this sentiment is clearly shared by the survey respondents, and nearly 50% have indicated that they would expect these markets to reach over 70 billion in 2025. And of this, around 20% to the volume to exceeds 80 billions. Now, focusing on continuation vehicle, we are seeing the continuation vehicle, in particular, the single assets continuation vehicle being one of the main drivers of GP-led transactions in general. Looking at the results of the survey, nearly 70% of the respondents indicated that they are either highly likely or somewhat likely to consider a continuation vehicle in the next 18 months. And it's also interesting to note that single assets is the most popular type of solution within the continuation vehicle, and the GPs indicated that 60% of the GPs that have actually completed a continuation vehicle and in fact completed a single asset type of transaction. So with the evolution of the secondary market, clearly continuation vehicles are becoming a well-accepted and reliable portfolio management tool. And the way clearly for GPs to provide an exit to the portfolio company and the liquidity to investors. And this has, to a certain extent, also mitigated some of the risks that are associated with traditional exits like M&A and even more IPOs, particularly in the current uncertain market conditions. Now, if we look at the survey again, almost 40% of the respondents indicated that one of the key objectives that they want to achieve when pursuing a CV solution is to generate liquidity to their investors. And the same number of respondents indicated that they also want to hold the portfolio for longer. So extending the hold period is one of their key objectives. And this is, to offer the flexibility to GP to retain the assets for longer, to maximize returns, and particularly avoiding perhaps selling in suboptimal market conditions, and avoiding leaving money on the table, and also to capitalize on valuation increases as the market improves. Also, follow-on capital, it's another objective that the GP want to achieve, with nearly 20% indicating that that's one of the main driver when pursuing a continuation vehicle. I mean, from our perspective, we've seen actually follow-on requirements being part of many of the transactions that we've seen. And this is particularly relevant for those type of GPs that are actually looking at kind of buy and build strategies as their key part of the strategy, their investment strategy. And in fact, having additional follow-on capital can be extremely beneficial because they can actually take advantage, particularly in the current market condition, of the dislocation that they see there, and also acquire perhaps other, competitors at attractive valuation. Now, a view from the secondary investors. As part of the survey, we have asked what are the key factors that GPs have been considering when evaluating an opportunity. Unsurprisingly, asset quality is at the top of the list. And what we've seen is particularly, in uncertain market condition, there is usually a strong flight to quality. Focus on completing particularly kind of trophy continuation vehicle around the trophy assets. This is because the GP like to hold their best assets for longer, and in order to ensure that they can maximize the returns. I would say this is coupled also with the fact that also the investors, so the buyers, the secondary buyers, have particularly strong appetite for quality assets. And they are also willing to pay perhaps, very competitive price for this type of assets, and which in turns, in fact, maximize the probability of successful execution for this type of transaction. In fact, another interesting response is that the respondent in the survey also mentioned that they tend to see the assets which are part of a continuation vehicle be held at cost, at least for the first quarter after closing of the transaction. If we look at the next factor, then is valuation. So previous page, please. So valuation was highlighted again as one of the key factor when evaluating GP-led transaction, and this is followed by GP quality. I would say, interestingly, the returns are only fourth in the list of factors that are considered by investors when evaluating an opportunity. And this is perhaps to a certain extent a reflection of the uncertainty that we're seeing in the markets, and the fact that buyers are willing to focus more on quality perhaps than higher return. This is followed by the same number of respondents indicating that GP alignment is also a key factor. I mean, in general, what we are expecting is that this type of solution continue to be broadly accepted and continue to be accepted, and increasing the acceptance among GPs. And we will see also a continued demand for high quality assets, continuation vehicle, even as the M&A and the IPO market recovering. Michael.
Thank you, Sabina. And now if we switch gears and focus on the views from GPs and highlight some of the respondents and the views from the sponsors in our survey. Here, similarly, we've asked the sponsors to provide some views in terms of considerations that in their view are the most important when they look at the possibility of evaluating a secondary or continuation vehicle transaction. Now, GP-led secondary transactions can be the most important public, yet still private transaction a GP completes, as the transactions are public with arguably the most important constituents of the GP's franchise, their existing LPs. This often requires the GP to inform their LPs well ahead of the launch of a transaction in the market and to secure their support for a contemplated transaction. It is slightly different than a traditional exit or an M&A deal, where the notice is usually communicated to LPs through a distribution notice or perhaps a footnote at the AGM. The importance of addressing LPs' concerns is also becoming increasingly prioritized, which starts through the clear articulation of the rationale and the motivation of the secondary transaction ahead of any process that's launched in the market. If you look at the results from our survey, it clearly sort of states that the views of existing LPs have been the most important consideration for GPs when assessing the possibility of a continuation vehicle. This again shouldn't be surprising given the still relatively selective fundraising market. GPs, of course, are giving renewed attention on maintaining their strong LP relationships. And here the focus again is very much on a very transparent and also efficient process when we are looking at secondary transactions. This is also anticipated to be strategically advantageous for forward-looking GPs, given the expanding investor base in the secondary market. Whilst their existing LPs may just be primary counterparties today, many, of course, are now contemplating or have already recently started developing their own secondary investment capabilities. Hence, the maintenance of these relationships is becoming increasingly important. Our survey also found that over 60% of respondents did not see an immediate markup in valuations post the closing of a continuation vehicle transaction, again suggesting that these deals have been closed at prices that are broadly reflective of the current market-based valuations of the assets that are transferred into continuation vehicles. If we next look at fund financing, here again, we provided some questions to our survey respondents to assess their appetites and their uses for fund financing solutions utilizing secondary capital. Now, fund financing is becoming an important tool by which GPs can raise additional capital to fund new acquisitions and follow-on investments into existing assets. If you look at the respondents in our survey, 45% of them stated the provision of liquidity to LPs as the main objective for fund financing, while 27% actually mentioned funding existing assets in the fund as the primary objective. As we continue to see interest rates normalize and stabilize, we are seeing GPs increasingly turning to fund financing, with over 30% of our survey respondents considering a fund financing solution in the next 18 months. Our survey results indicate almost 20% of respondents also noted liquidity generation for existing LPs as a primary objective for executing fund financing. Financing a portfolio as opposed to selling assets offers an alternative solution to generate liquidity for LPs, especially for assets that may not quite yet be primed to sell in a traditional exit process. Among the types of fund financing solutions executed, NAV facilities were the most popular, with 60% of survey respondents who confirm that they have executed a fund financing solution in the last 18 months to actually having done so through a NAV facility. Now, when we look at the evolution of the competitive landscape, we continue to see increased competition in the secondary market, with new capital adding dry powder to existing participants, as well as backing potentially new entrants and new strategies in the market. Secondary investors surveyed indicated a notable increase in competition, particularly from GPs setting up their own secondary capabilities. Now, the growing presence of new entrants, particularly GPs, which sometimes bring deeper sector expertise and more defined strategic focus compared to existing secondary investors, has resulted in a shift in focus towards asset quality and deal evolution. As a result, investors are prioritizing deals with strong underlying assets with the potential of outperformance. Now, to stay competitive, secondary investors are increasingly leveraging their existing GP relationships to be involved earlier in the deal stage evolution in terms of a transaction, to be able to shape the deal more effectively, and also to secure a deal flow allocation in a highly competitive process. Secondary investors are also expect the growing sophistication in the market to drive further specialization. Now, historically, investors have tended to be more open to a wider range of sectors in their commingled secondary programs. However, this trend is likely to change as the market continues to mature, again, resulting in a deeper and more efficient market where investors can capitalize on specific expertise to identify more attractive assets and opportunities, and they can perhaps get an underwriting edge over their competitors when evaluating a competitive process. To summarize, the market outlook for GP-led secondary transactions is positive for 2025. We continue to see an expectation of growing volumes, which will be fueled by increased adoption across both sponsors and LPs, as well as expanding pools of capitals and sophistications to back a wide array of transactions. Now, we anticipate further meaningful growth in the space, considering approximately half of our respondents have not executed a GP-led deal in the past 5 years, but are now open to doing so in the next 12 months. With growing acceptance of GP-led solutions as a recognized portfolio management tool, we expect continued growth in demand for GP-led deals, especially continuation vehicles, given the strong asset quality and well-defined processes to generate competitive market-based pricing. As the secondary market continues to evolve, we anticipate further specialization amongst new investors, especially GPs with secondary capabilities, also encouraging established secondary investors to hone their expertise in specific asset classes. Larger players are further contributing by venturing into new areas such as credit secondaries, again demonstrating the market's continued growth and adaptability. To successfully execute a GP-led deal, GPs will need to continue to address the requirements of their existing LPs, primarily for transparency and clear transaction rationale. Again, keeping the most important contributors to their franchise, their LPs, front and center. GP-LP relationships will remain a key feature of the secondary market. Again, a reminder that GPs expressed their existing LPs' views on contemplated secondary solutions as being the most important consideration when evaluating the possibility of a transaction. Likewise, secondary investors cited the advantage of an existing GP relationship as being a key in the ability to source a transaction, but also successfully position themselves in a highly competitive market. That concludes our formal presentation on the webinar. And now perhaps we will open up the floor to questions and allow a few seconds for the first questions to trickle in. Perfect. Looks like we've got our first question. And the first question centers around the challenges in balancing the conflicts of interest in GP-led transactions, and also looking at the alignment of interest between, of course, GPs, LPs, and secondary buyers in GP-led continuation vehicle transactions. Again, a great question, as in a lot of these situations, the GPs represent both the selling and buying vehicle. And also, as we discussed in the evolution of the secondary market, existing LPs, which of course are the primary backers of these vehicles and have committed to the original fund, may also have or are developing secondary pools of capital that are considering investing on the buy side in these structures. And these transactions, of course, it's a very delicate balance between managing the conflicts of interest between all the parties in the transaction, and also ensuring that there's a third-party advisor in the process to drive a market-driven competitive process to ensure that we maximize the outcomes for the selling LPs, and also provide a structure and a solution for the new vehicle that's being set up, which will be managed by the existing sponsor and backed by new investors. In these processes, generally, GPs are seeking growth capital and management continuity. Existing LPs, of course, want liquidity, fair pricing, and in some instances, the opportunity to stay further with the asset. And new investors, firstly, of course, are looking to prioritize downside protection, but of course are looking for upside potential as the asset continues to its generation and its growth into the next sort of phase of growth. Next, maybe I'll turn it over to my colleague Ludovic to take the next question from the floor.
Thanks very much, Michael. So if I look at the second question, how do you see the LP-led secondary market dynamics affecting appetite for GP-led transactions? It is indeed an interesting one. Actually, what we are observing since the beginning of the year is that a large portion of LPs are putting a lot of pressure on GPs to achieve liquidity. This has two main consequences, let's say. First one, if GPs do not find traditional or less traditional ways to provide liquidity, then LPs may be willing to work on their own solution. Even LPs that are actually not, that we don't see as sellers traditionally, are reaching out to us to launch LP stake secondary processes, and this is new. The second consequence is that GPs who would like to stay in control of their LP basis are starting to use more and more GP-led tender processes to please their LPs with accelerated liquidity. Last but not least, this also has, in my opinion, consequences on acceptation of continuation vehicles from LPs, who tend to see more positively this solution than in the past. Maybe Sabina, would you like to take the third question?
Thanks, Ludovic. I think we have a couple of questions around what are we seeing the trends, what trends are we seeing in the GP-led secondary market? And to that, I would note that we are seeing an increase numbers or increased interest, I would say, among GPs active in the mid markets and in the lower mid market for this type of solution. Probably they've been a little bit more cautious to enter into the market initially compared to their, more kind of the larger cap GPs, but they are now really embracing the secondary markets. And so we are seeing them be more active. They are either pursuing, currently we've seen it, if they completed recently, or they are considering completing a continuation vehicle in the near term. This one is probably coupled also with the fact that there is a strong appetite among buyers for this type of transaction. In fact, these type of transactions tend to be perhaps have a little bit more certainty of execution because the ticket size is smaller, and and also they don't need syndication, or perhaps limited syndication, which limited the risk in terms of execution of this type of transaction, but also in terms of the timing necessary to complete this type of transaction. Another trend that we're seeing is also like an increased interest and popularity among for a structured solution. And this is like a way of bridging the gap between buyers and the sellers' pricing expectation. We've seen more earn-out and preferred equity investments being completed, which provide an attractive, obviously, early liquidity for the existing investor in the fund, with coupled with the fact that they can also retain in the upside for an exit. And this again is also matched by the fact that there are more investors that are actually have raised or are raising dedicated pools of capital for this type of solution.
Perfect. Thank you, Sabina. Thank you, Ludovic. And unfortunately, we're running out of time, so this concludes our webinar this morning. Again, thank you very much for everyone who's attended today's webinar. And also a special thank you to all of our survey participants for providing the inputs into our survey and supporting the results that we presented this morning. A recording of this will be available via our website in due course. But of course, in the meantime, if there's any specific areas that you'd like to discuss, or if you have any further questions, please don't hesitate to reach out to myself, Sabina, or Ludovic. Again, thank you very much this morning for participating.
Thank you.